Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, February 5th, 2014. The averages today, bounced back a little bit today, but even with all three sides being higher on the day, the veracity of the buying in the level of the bounce was certainly left a lot to be desired. Let's just leave it at that. Internally, the market was okay, but not nearly good enough to really offset the damage that was done yesterday. But without further ado, let's move on right to the charts with the levels and look at the major futures contracts first. All right, so here's a look at the ES futures. A couple things should be sticking out. The first thing is going to be kind of a theme throughout the all the reviews today of the charts, and that is that we've got an inside day going here, meaning that today's candle, the high and low, is contained within the range of the previous day. So there's really nothing new technically until we break out of that range, and can really make some more sense out of what the charts are telling us. We did settle for a second time below the 4-ace level, below that 1750 area, and in fact, you can see the narrow range of the body today. It was a really skinny day. We opened at 1744 and a quarter, and we closed at 1744. So we essentially just spun our wheels today as sellers were just standing on the offering and just unloading positions to those who are willing to take them. The reason I say that too is because we also spent the entire session today in the bottom half of yesterday's range. So while we couldn't even attempt to get into the top half of yesterday's range, much less put in any kind of a reversal day, that's just a sign of distribution. Another feature today is that today was the highest volume of the year, even topping what we traded yesterday, at least as far as the futures contracts go. So key support is going to remain at the low set from the previous candle, about 1732. To the upside, we're going to have some resistance or possibly a draw at 1750, and then clearly the next big level to take is going to be to take out the range high from that nasty down day. Moving on to the NQ futures, the NQs really a very similar day, but the NQs are still for now at least holding out to some of their relative strength. Reason is, take a look at this. The NQs are still trading above the 4-ace level. We settled down below it yesterday, but today they were able to hold it up above that 4-ace level. And as you recall from the previous chart, the ES side of the market is already below the 4-ace level. Inside day, also in the lower half of the previous day's range. So nothing but another distribution day from the bears. And you can also see that we did increase today's volume versus yesterday's volume. The other key levels to watch are going to be the static trend line, which is going to be the low from this candle, about 34.17. Then to the upside, the 5-ace level is approximately coincident with the 50 DMA and also the high from the previous session. So that's going to come into play. So if we get back up to about 35.23 or so, we're going to start to see some pretty good resistance there on the Nasdaq side. So keep in mind, this is an inside candle. When we do resolve this range, we should have some decent movement. Here's a look at the Dow. The Dow, this is the cash Dow. Cash Dow closed below the 200. Usually, you're going to gain that 200 period DMA, so we were not expecting it to release below that. So we're going to have to kind of just use that as a magnet here for at least a couple of days. Today it was the high of the session. So if we get up and can clear above that, next resistance is going to be about 15,625, and then we're going to have support at the low from the previous candle. And if we break down below that, about 15,357, then we're going to have further range expansion to the downside. The other thing to keep in mind here is that we are 9 days down on the count, and we are somewhat oversold, but not climactically. We're only about we're still just barely under that 70 threshold for the ADX, so it's not that slam dunk reversal. You really want to see that solidly into the 70 area for a better reversal off of that 9 bars. The Other thing to keep in mind here is that just like the other charts, we're inside the previous day's range, and we also closed in the lower half of the range. Okay, the one thing we did do, we did have a little technical development in the TLT. It was an inside day, but we did close in the lower half of the range. So make sure you mark off the low and the previous low in the TLT about 107.60. If we lose that, then we could actually start talking about a reversal and a retracement, perhaps down to this 4-ace level at 106 and a quarter. Remember, we did smack this 8-ace level, which is a very substantial level. So we're going to come back down here and game this 200 a little bit. We had this gaming right here at this settlement. We had this explosion to the upside as people were scrambling for cover, and then we started to roll back down. Now we're inside the same candle, but we did not close in the upper half. We closed in the lower half. So that definitely is different than the other candles that we're looking at so far. The other thing to note is that tag of the 8-ace level was also coincident with the volume surge, and was a 12-month high in volume, and certainly the best volume that we've seen all year by a good margin. Now we're talking about the TLT in detail because we want to talk about traders taking risk on or off right now, and perhaps maybe they might begin nibbling. We did see a reversal in the S&P TLT ratio, with strength returning back to the S&P since the TLTs were down on the day and the S&P was up. We're definitely seeing a little bit of a curl up here, so we've got a lot of room to rebound back to the upside in this ratio, which would support a reflexive bounce in the market to relieve the overall oversold condition in the major market. And here's a look at the 10-day trend. The 10-day trend is still above the oversold threshold. So for now, there's plenty of oversold energy in the market that could be released and support prices to the upside, at least for some time, until we get at least back to the neutral area. So keep in mind that this, with the print from yesterday, having the trend closing at about 3.3, we're going to have a pretty elevated number in this average for some time. All right, here's a look at the individual sectors ranked from best to worst. Top gun was the broker-dealer index, followed by the transports. The broker-dealers had a pretty good spread above the transports. Broker-dealers were pretty strong today. The transports, good to see them near the top of the list, perhaps exerting themselves. The other thing that was actually a little bit positive today was, while the transports are near the top of the list in performance today, the oil services, the OSX, was also relatively strong. The BKX was up there fairly decently. So that's definitely a positive for the broad market, because the broad market is the one that really needs to arrest this slide. As you recall, the Dow 30 are 9 bars down and have a great deal of relative weakness versus the other major broad market averages. Here's a look at the broker-dealer index. This is the top gun on the day. Pretty much similar to the overall market, but just with more relative strength. It did close in the bottom half of the previous day's trading range. We are full 8 days down, or 9 days down now, in the setup for the seeker phase here, 1 through 9. So that's complete. So we definitely could see a little bit of a bounce here. If we do continue to the upside, we're not going to have any real resistance until we get back to this breakdown area that lies above 153. To the downside, if we do release to the downside, there's really not much support until we get all the way down to this 2-ace level here. Was the origin of the breakout here, and the 2-ace level is also that in-between harmonic that has more power than the odd-numbered levels. Here's a look at the Dow transports, still trying to hang on to the area of that static trend line. Trend line has been violated on a closing basis, as you can see. It did follow through to the downside. So we're gonna, if we do roll back to the upside, we're gonna have resistance in this area where we broke down from. So there's gonna be some layered overhead there until we get back above that 7-ace level. If we do roll back to the downside again, that 4-ace level is going to be the next target to the downside. And keep in mind that, like a lot of the other charts, I hate to keep saying this, we did settle in the bottom half of the previous day's range. Oil services, inside day, but closed above the top half of the range. This is one that has already rolled over and could be ready to pivot back to the upside a little bit. If we do turn back to the upside, the first area is going to be the 0 ace level at 265. We have completed 9 bars down. We've got a nice low 8 reading here in the setup phase. So first target's going to be that 0 ace level. That's coincident with the 10 EMA. That's the blue line. Then if they can continue to the upside, we can talk about the 200, but let's not put the cart before the horse. BKX today was fairly decent. Didn't break down and follow through. We are 9 bars down, closing the bottom half of the range. I'm going to try and stop saying that. The static trend line here is still in play. We have not violated that, so that's still going to keep plotting and projecting. So the static trend line is definitely still in play. If we do pivot back to the upside, we've got a pretty clear area here, which was the previous day's high, which is coincident with the low of this multi-day range. So that's going to be the target to the upside. Now that's right around 67.5. If we roll to the downside and continue lower, the 200 DMA is going to come into play. The BTKs on the day were okay, but only just because they didn't get hit quite as hard as a lot of the other broad market measures yesterday. This is another settlement below the 8 ace area. We're essentially setting up a little bit of a wedge here, if you can see straight across here and to the downside here. So this 8 ace level is going to be a pivot as we get closer to the apex of that falling wedge. And finally, the laggard on the Nasdaq side of the market was the semiconductors, the SOX index. SOX index was pretty weak today. We did take out the previous day's low. We're using this 2 ace level as support. If we lose that, then there's pretty decent space to get back down to this 1 ace level, and then probably ultimately this 0 ace level at 500. If we do roll back to the upside, the 10 EMA is coincident with the previous day's high, and then 4 ace at 531. This chart actually doesn't look that good. Keep in mind that to the downside here, we did just penetrate the 0 line in the MACD, so this is the area where we can start to gather some downside momentum. So make sure you keep some ideas from this sector, handy on your short list if we do develop some some kind of a downside bias in the market, either tomorrow or the following session. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.